You've probably heard this statement before. Bitcoin follows a 4-year cycle. And this has largely been true for over a decade. Every halving, every bull run, every brutal 70% drop, all on schedule. And right now, we're in that danger zone. Welcome to Coincidence, where we talk about crypto market trends you do not want to miss. It's been 18 months since the April 2024 halving. 35 months have passed since the November 2022 bottom. Historically, this is exactly when Bitcoin peaks, right before the fall. So the question everyone's asking is very simple. Is this cycle about to end? Or is something fundamentally different this time? In this video, we'll break down the classic 4-year cycle theory, examine where we are right now, and explore two powerful forces that could shatter the pattern entirely. Let's start with what we already know about Bitcoin's 4-year cycle, and it's tied directly to the Bitcoin halving, an event that cuts new Bitcoin supply in half every 4 years. The effects of Bitcoin halving play out in two distinctive steps. Step 1 is the post-halving bull run. After each halving, Bitcoin surges. The peak comes roughly 18 months later. Let's take a look at Bitcoin's price action across the years. You can see that after the 2016 halving, there was a peak in December 2017. Similarly, after the 2020 halving, there was a peak in November 2021. Then comes step 2, the bear market. A year-long decline, 70% or more from the top. Again, in the Bitcoin price chart, you will see that after 2017's post-halving peak, Bitcoin bottomed in December 2018. Similarly, after the 2021 post-halving peak, Bitcoin saw its lowest price in November 2022. In both cases, the bear market lows were spaced a year away from the corresponding bull market highs. Another thing that you will see is that the space from the bear market bottom to the next bull market top is roughly 35 months. And here's the thing. Right now, we are 35 months away from the November 2022 low. We're also 18 months past the April 2024 halving. By the old playbook, this is it. If you remember, in early October 2025, Bitcoin hit a new all-time high around $126,000. Then pull back really sharply. It looks like the classic top, the kind we've seen twice before. So the question is, are we done? Chapter 2, what could break the cycle? Not really, because this time, two massive forces are at play that simply didn't exist in previous cycles, and they could change everything. The prevailing macro environment. Let's talk about interest rates. In every past Bitcoin bull run, be it 2012, 2016 and 2020, the US economy was in a low interest rate environment. This meant that borrowing was cheap, liquidity was abundant, and investors were more willing to take risks. Capital flowed freely into growth assets like tech stocks and crypto, helping Bitcoin climb to new highs. But over the period of the bull run, the Fed started stepping in. Take the case of the 2016 bull run. You would see the interest rates went from 0.25 to 0.5% in December 2015 to 0.50 to 0.75% by December 2016, reaching around 1.5 to 1.75% by March 2018 as the tightening cycle continued. That gradual rise in rates slowly pulled liquidity out of the system, cooling down risk appetite and setting the stage for Bitcoin's eventual correction. In contrast, the 2020 cycle is completely different. Going into the 2024 halving, rates were at 5.5%, the highest in 2 decades. We started this bull run in the most restrictive monetary environment Bitcoin has ever seen. But now, the Fed has already started cutting interest rates. As of November 2025, the Fed rate stands at 3.87%. While previous cycles were slowed by tightening, this one is being boosted by easing. But that's not all. President Trump plans to replace Fed Chair Jerome Powell when his term ends in May 2026. The administration is signaling continuity of rate cuts under Powell, followed by a potentially more pro-easing chair in 2026. In simple terms, liquidity is coming back. This alone could extend the cycle for Bitcoin beyond the 4-year script. Of course, there is one more thing that is different about this cycle. One more force that could change Bitcoin cycles as we know it forever. That and more we have compiled in this week's Alpha report available on the Mudrex app. Check it out to dive deeper into the numbers behind this unprecedented cycle. In this report, you will find a full breakdown, the exact timeline calculations, institutional accumulation charts, and the correlation analysis that supports this lengthening cycle thesis. Either way, one thing is certain, this is not your typical Bitcoin cycle. Remember, in crypto, the only constant is change. Don't forget to subscribe to the channel for more such deep dives that cut through the noise in crypto. Until next time.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions. For any queries, contact us at help@mudrex.com.